Good morning, Steve Free in Chicago with the morning grain comments. Have a mixed trade overnight with beans higher, corn about unchanged, while wheat's a little bit higher. Outside market stocks marginally higher, while the dollar's higher, crude's lower, and gold's lower. I think markets are continuing to try to figure out the impact COVID has on food and fuel demand globally. I think markets will be watching pretty closely the Congress and see if they pass the stimulus bill, or what the Feds do as far as tapering down the road and interest rates. Right now, they look to be delaying any tapering or increase interest rates. As far as weather is concerned, here in the United States, there were some rains over the weekend favoring the southern Midwest. The 2-week forecast is warm and dry, which should help maturation and harvest. And also, it will be dry down the southern plains for wheat planting. Brazil is dry, and I think there's some concern there as they start planting their corn crop. And Argentina's had some good rains for the start of their season. Russia's spring wheat harvest continues with yields a little bit below what people are expecting, while the winter wheat needs rain to get the crops planted there also. Australia raised their wheat crop, but anything over above what it is right now probably is more in the carryover because of logistics of shipping grain out. We also know that China, August soybean import numbers were 9.4 million tons. They only need about 4 million tons in September to reach the USDA's goal of 97 million metric tons. Also, word that China is buying pork out of their, buying pork for their reserves to try to help the domestic demand of pork, which might limit their imports. We also saw Malaysian palm oil up higher. Their production was revised downward, export demand revised upward. Brazil corn exports about 19 million tons versus the government's 23. And again, like I said, they're planting in some dry soils next year's crop. Friday, we have the USDA numbers, and we'll be looking at maybe the trade's looking for maybe a bushel more in the corn yield, half a bushel more in the bean yield, higher 2021 corn and soybean carryouts, higher 21-22 corn and soybean carryouts. So for the most part, that might be a little bit of a negative number. There might be some China pricing underneath the soybean market. Paris wheat futures a little bit lower, Dalian corn lower, while Dalian soybean meal, soybean palm oil, and soybean oil are all higher. Technically speaking, we're still kind of in a downtrend here, and we need to trade quite a bit higher in order to turn the funds to be net buyers, and also turn the negative bias technically up higher. The problem is it's hard to rally as harvest begins. It's hard to rally into that USDA report, and it also is concerned about the demand long term, and the demand bears seem to be more prominent in the trade than the supply bulls. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.